Good morning. This is Arlan Suderman, Chief Commodities Economist with StoneX on this Monday morning, October the 20th. It's day number 20 of the partial government shutdown. No sign of it ending at this point. I'm sure the Senate will take up discussion again today on whether to allow a vote on a continuing resolution. But until they do so, it looks like we're going to remain in that partial government shutdown. So as we look at what's driving the commodities this morning, and we did see overnight that soybean prices were up 8 to 9 cents, corn up modestly, wheat mixed, and that's kind of the way we're going into this morning's trade. Soybeans setting the tone. Crude oil prices fell to a new 5-month low in early trade today, but bouncing off that lows, we do see some buying on that break. Overall, crude oil supplies remain big, and with OPEC Plus voting to continue to increase supplies in order to regain market share in the world economic growth outlook somewhat subdued at this point. Traders not too worried about running out of crude oil at this point. But these low prices, again, allowing market share to switch from the shale oil fields to OPEC nations, as our cost of production in the United States is higher than what many of these OPEC countries are. Well, let's focus on the news of the weekend, and this really comes back to comments from President Trump once again, as we are again being a headline driven marketplace. We saw the cattle market collapse on Friday after President Trump had made comments late on Thursday about having a deal in place in order to be able to bring the price of beef down. He confirmed with a comment yesterday what he was referring to was importing more beef from Argentina. We're still pretty scant on details of that. We do import some beef from Argentina. Apparently, the president trying to ramp up the scope of those imports that we get from Argentina in order to increase the supply of beef in the United States. And that was the big part of the sell off that we saw in the markets on Friday. The beef markets are actually bouncing today with that confirmation. Kind of, I think, relieved that it didn't include removing the 50% tariff on Brazilian beef. As we look at the grain and oilseed markets, it's soybeans that are seeing the strength. President Trump again making comments that he was optimistic that we'd be able to get a trade deal with China when he meets with President Xi on the sideline of the APEC conference in South Korea next week. This week, we see a lot of things happening that will set the tone for that meeting. First of all, we see Treasury Secretary Besant is in Malaysia meeting with the Chinese vice premier to try to negotiate some type of a deal ahead of next week's meeting of the heads of state. Will they be successful in doing so? Now, President Trump's comments yesterday that he anticipated soybeans being in any such deal did help support soybean prices overnight. Remember last August when he said that he was going to try to force China to buy 4 times what they bought from us in the past? Well, that was impractical and wasn't going to happen. Now he's saying in comments yesterday, I hope that they at least buy what they bought from us last year. That equivalated to about 841 million bushels. They have been largely buying from South America to this point, and we estimate that they need about 10 million metric tons or 367 million bushels in order to fill the rest of the gap needed between now and when Brazilian supplies, new crop harvested Brazilian supplies, which will be cheaper than U.S. supplies, become available and reach Chinese ports in February. So, should we get a deal for those 367 million bushels or 10 million metric tons, that would be a positive. It's way below last year, but it would still be a positive because of the strong domestic demand that we have this year. We had a NOPA crush report last week that came in about 11 million bushels above the average trade estimate, and showing the strong crush demand despite the fact that we don't have a well-defined biofuel program at this point yet. We're still waiting for clarity from the EPA, and with the government shutdown, that's probably going to wait until sometime this winter. But regardless, crush was strong, and in fact, the first month of the marketing year, crush is 10 million bushels above the seasonal pace needed to hit USDA's target for crush. I don't expect crush to go much above USDA's target, maybe a little bit, because basically what USDA has calculated there is our crush capacity that we know of times about 0.95%. In other words, allowing 5% below capacity for maintenance downtime periodically throughout the year. Maybe we can squeeze that and get it a little bit higher, but not a lot. So any exports will certainly help. Now, USDA currently has exports for soybeans at 1.685 billion bushels for this current marketing year that started September 1. I would estimate, based on the lost business that we have at this point, that we're probably looking at 1.530 billion. And if they don't buy a bushel from us all year long, that could slip to 1.4 billion, assuming we hit record non-China business this year. Our record for non-China business in the past was 1.267 billion, as I recall. And so assuming we can get that up to 1.4 billion if we do no business with China at all, that's the downside risk to our export demand for the current marketing year. If we were to get that 10 million metric tons of business from China, that may enable us to hit USDA's target for the year 1.685 billion, with ending stocks maybe creeping below that 300 million bushel mark, providing some support for the market, keeping us susceptible to any type of weather scares that might develop. So that's a possibility. If anything above that further increases exports and further reduces ending stocks to a more bullish demand for soybeans. So that's kind of the pivot point. Do we get the 10 million metric tons or 367 million bushels worth of demand from China in some type of a deal? Is it more than that? Is it less than that? If it's right at that, it probably helps us hit USDA's current target. If not, when USDA reopens, we probably need to see them make a substantial cut to the export target for soybeans. So the next WASDE crop report, and that hopefully will be the November report. I don't expect an October report at this point, with the government being shut down 20 days and counting. By then we should know if we have a deal including soybeans with China. And if we do not, look for a substantial cut in exports. At least that's what USDA should be doing. If we do have a deal, look for it to reflect that deal with China. So that could be really pivotal. Now, the other thing that's going on this week is the fourth plenum meeting of China, where President Xi of China is heading up this meeting. It started today, will conclude on Thursday, which establishes the 5-year goals and objectives for Chinese Communist Party going forward, 2026 through 2030. It's another way for President Xi to also establish his authority and his power in China among the leaders of the Communist Party. This is something in the last meeting where Xi did to establish his power as well. If he comes out of that, and we're not going to see this in headlines most likely, but if he comes out of that feeling strong and in control, he may play a tougher role against President Trump. If he comes out of it feeling like there are cracks in the foundation of his support, he may be more anxious for some type of deal. Regardless, I do not expect a deal to allow rare earth minerals to come to the United States that might be used, the higher grade levels that might be used for production of defense weapons. I absolutely think they're going to hold the line on that. There may be a deal to allow low and mid-grade rare earth minerals and magnets to come to the United States for production of consumer goods and industrial goods. But they're probably, if that happens, probably continue to see requirements that manufacturer provide proprietary information on how those products are produced. And so that probably, if that were to happen, a continuation of what we've seen here in recent months from China. So I do not expect this meeting to solve all of our problems with China, even if there is some type of deal. I think those are pretty significant and will continue on for a while. But the opportunity does exist for some type of an agreement that could ease tensions a bit for now and may allow some resumption of demand for soybeans at some level. This is Arlan Suderman. Be sure to like and subscribe if you want to continue to get these updates from the trading floor. We'll be back with you as new headlines develop.